Today, we're going to talk about that recommendation you've heard several times out there: not to buy a house until you see this sign, or not to buy a house right now because it's not a good time, because it's not the right moment for the market or for interest rates. That's what we're going to talk about today. There's an Arabic saying that goes, if you don't know what to do half. And with this, what they're trying to tell you is it doesn't matter what moment you're in or what people are saying out there. If you really want to benefit from any market situation and any market timing, you have to do something. That's why the saying goes, do half. This saying, like all of them, should be handled with great care. What it's telling you is not to stay inactive. If you have the desire, the need, or it's the right time in your life to buy a house, do it. And if people out there are telling you it's not the right time, that it's terrible, that interest rates are sky high, maybe you want to start with a more affordable house, a smaller one, or if you prefer, something more modest so you don't miss out on the opportunity to buy your property at the moment you want to. Because this moment in the market, which for some is terrible, is actually the moment you can take advantage of since everyone else is scared. Not just buyers, but sellers are scared too. And that's why in different areas, cities, and regions of the country, prices are dropping because this fear leads to houses not being sold. That's why this is the moment you can take advantage of. Go out into the market and buy a property when everyone else is scared, when everyone is telling you not to buy, that it's not a good time, that interest rates are high, that the market is high. If you go out and make an offer on a property, it's very likely that your offer is the only one that seller is receiving. And guess what? The chances that your offer will be accepted, for example, if you offer less than what the seller is asking, are much higher. Unlike waiting for interest rates to drop or keep dropping, because that's what people think is going to happen. If you wait for that moment after interest rates have dropped, it's already too late, because when people out there start saying that rates have gone down, at that moment, thousands of people, possibly just like you, are going to enter the market. And then that house you like won't just have one offer anymore. It could have 3, 5, 10, or even 40 offers. And guess what? At that point, there will be a bidding war, and that house will go to the highest bidder, the one who offers the most. Not to the only one, which could be you if you take action right now. And let's go back to the question. When could that moment come? Or when will that perfect moment arrive when interest rates drop and home prices go down? The first part of the question, when interest rates drop, you should know that mortgage rates change. Listen to this, every single day. Just like you have indeed heard, not only every single day, but several times throughout the day, mortgage interest rates can go up or down, and they frequently do. Don't keep using that outdated strategy of always listening to what the Fed is going to do and waiting another 2 months to see what the Fed said, because mortgage rates are constantly going up and down. And if you want to take advantage of a drop in interest rates, which no one knows when or at what moment it will happen, you need to already be in the game. You need to already be decided and formally pre-qualified by a mortgage manager. That is, if rates drop today, let's say by half a point, and you say, perfect, rates have dropped. Now I want to get in. At that moment, you start searching and, for example, you make the mistake of just starting to look to a home seller and say, look, Mr. Home Seller, I heard that interest rates dropped by half a percentage point this morning. That home seller can't do anything for you regarding the loan. They have to send you to a third party or ask you to find a banker on your own. And after you find one and talk to that person, if you did this really fast, managed to do it in an hour, 2 hours, that same day when you heard rates dropped, this person will ask you for all your interview documents, take your information, and if you're an incredibly organized person, maybe in 2 or 3 hours you've already sent all your information. The mortgage manager organizes it, runs your credit, and guess what? Probably by the time you get to this point, 2 or 3 hours after you had the light bulb moment and decided to buy the house because the rate dropped. Possibly that same afternoon, those rates that had dropped by half a point have already gone back up. Thank you. And you missed the opportunity. If you make the decision and take the strategy of acting only when everything is good, when everything is perfect, the truth is that when buying your house, just like in business, you will always have to take a risk. And you always have to buy or take the necessary steps to purchase your home with a high level, hopefully a very high level of faith. Without having all the answers in hand, without having all the information, without having the perfect file or the perfect moment, because they will never come. If you notice from the example we just talked about, in order for you to catch that lower interest rate, for you to take advantage of it, you have to have already been in. And so your mortgage manager, if they're really someone who cares about you, is constantly monitoring those interest rates, and by constantly, I mean every day and at all hours, so that the moment they drop at that exact moment, they lock in the rate for you and give you an excellent option. I've had cases with clients where I lock in an interest rate for them because it's really good, and then days later, 1 or 2 weeks later, before the deal closes, the rate drops again, and then since I work alongside and hand in hand with my clients, I go and knock on the bank's door and say, Mr. Bank, the interest rate has dropped again. I want to renegotiate the rate. That's the legal term. And then when the bank representative hears the magic words, I want to renegotiate the interest rate, they crumble like a sandcastle, and my client gets an even lower interest rate than the one I originally locked in for them, which was already good, already low. But to achieve all of this, if you notice, the most important thing is that you make the decision to enter the market, that you have faith, that you have confidence that everything will turn out well. And at the end of the day, if in a year, 2 years, or 3 years, interest rates drop again, which nobody knows because they could go up, but if they drop by 1 or 2 percentage points, you can refinance your loan at that moment and get that fabulous interest rate that might be available in the future. And here, some people might say, no, Alberto, but I don't want to refinance in 2 or 3 years because I'll have to start over with a 30-year term. For this, you can do that refinancing in the future again with the professional mortgage manager. Someone who is on your side, who knows how to help you, and who can set up the new loan for you, for example, for 25 years or 27 years. And so, instead of starting over with a 30-year term and losing the 2 years you've already paid, you would start your new loan having gained 2 or 3 years, because you lower it from 28 to 27 or even 25 years. You can have all these tools at your fingertips. Your mortgage manager can provide all of this, but for that, they need to be someone who knows what they're doing, who has experience, and above all, who genuinely wants to help you and get you the best deal possible. If you want to buy or refinance your home in the United States and you have a lot of questions but don't know who to ask, I invite you to buy my book, First Time Homebuyer. You'll find the answer to most of your questions in just 15 minutes. I'll leave a link to both the Spanish and English versions in the description of this video. But if you're already ready to buy and you need a pre-qualification or mortgage advice anywhere in the United States, you can contact me via WhatsApp and schedule a phone appointment to answer your questions and start your pre-qualification process, so you can achieve your dreams. As for the question, when is the market going to go down? When will be the perfect time for prices? The reality is that property prices, the market, react much more slowly. Unlike interest rates, which change every day, home prices move slowly, whether they're going up or down. But regardless of what stage the market is in, the most important thing will be that house you buy, the seller you're negotiating with, and the real estate agent representing you will be super important, so that this person can get you the best deal, regardless of whether you're in a buyer's market, that is, one that's good for you, or a seller's market. The reality is that if you're buying a house to live in, it's practically impossible for you to lose out if the market drops in the future, for the simple reason that you want that house to live in. And if in 1, 2, or 3 years, for some reason, that house is worth less than what you paid today because that famous real estate crash happened because houses are now worth less, you shouldn't care because it's your house, the one you live in. And if it's worth less, of course you're not going to sell it. You're going to keep living in that property. And those drops, which are real, are always temporary. That is, if there's a drop for 2 or 3 months, or even for a year or two, like what happened during the 2008 crisis, those prices bounce back. And houses eventually end up being worth not just what they used to be, but even more, sometimes much more, like what's happening today, where houses are worth 4 or 5 times more than they were just 15 years ago after the 2008 crisis. This is without considering that if you don't buy your house and keep renting, you're still paying a mortgage, but that mortgage belongs to the owner of the property that you rent. In other words, if you're renting today, you're already paying a mortgage, but without getting any of the benefits, because those benefits are going to the person or company that owns the house you live in, the one who had the courage and faith to make the decision regardless of the market at the time. Because remember, the more complicated the market gets, the more negotiation tools you'll have as the buyer, since you can tell the seller, Mr. Seller, you and I both know that houses aren't selling. So, how about you give me a small discount and we both win? You make a deal by selling your house, and I make a deal by getting a better price on this house for my family. That way, the seller wins and you win too, despite the difficulties in the market. Don't forget that if interest rates go down, home prices get pushed up, and it will be harder for you, not just to buy a house, but even to qualify for that loan. So don't let the opportunity slip by. If today you have everything you need, you have the ability to buy, you have a decent credit score, it doesn't have to be excellent. You have savings, you have a stable job where you feel happy, you feel capable of paying for a property. Maybe you're paying really high rent for a luxury apartment. Maybe by buying your own home, you could even save $20, $30, or $100 a month by being a homeowner. Don't let this opportunity pass you by if it's the right time in your life. That's the perfect time to buy. Not when they say so on TV, not when they say the market is finally right for you. It's when you decide, when your family decides, when you need it, and that's when miracles will happen. But it all starts with your decision. So take action and never stop. You can do it.